Hi guys, good afternoon. Welcome to today's session. I'd like to be sure I'm being heard. If I'm being heard, then we can continue.
Yes, please, I can hear.
Alright, okay. Thank you. We expect others to join in while this meeting is on. So today we're going to be talking about trading strategies. This is one key feature that we need to explore in the forex trading market, in the sense that without your trading strategy, you may not really be able to do anything. Okay, yes, you can bank on the share signals and all of that, but of course you still need your trading strategies to implement those signals that are being shared once in a while. So I'll just give a brief definition of what trading strategies are. They are plans that a trader decides when to buy or sell. It's more like you planning your day. You strategize your day. So before you start your day, you write out your plans for the day, and then you strategize on this plan, how you want to achieve this plan for that given day. And before you get into that day. So while all of that is put in place, then you can now say, oh yes, I'm ready to get on with my day. All right. So I think that's pretty much the best way I can explain it for us to understand. There are key parts in trading strategies. When to buy and sell, your time frame, your tools and analysis, managing risk. That's like the basic. Then you have the common trading strategies. You have scalping, day trading, swing trading, position trading, trend following. So yes, you may think of this as they are not trading strategies. Some of us might have in our mindset that, trading strategies are, SMC, SMT, whatever strategy you use to execute in the market. But these are also trading strategies. When to buy is your strategy. When to sell is also a strategy. Your time frame is also part of your strategy. Technical and fundamental analysis. Of course, you have that in as your tools and analysis. Managing your risk is part of your strategy. Scalping is a strategy. Day trading is a strategy. Swing trading is a strategy. Position trading is a strategy. Trend following is a strategy. We will get right into that as well. But I just need to say that, like I mentioned earlier, we have the popular strategies we know as, I pretty much don't know their names, but I know there is moving averages, there are moving averages, there are, I'm trying to remember the name. I know there is smart money concepts. I know there is ICT. There are just a few of them that I can mention, and there's the one I use, which is BTMM, which is also called Beat the Market Makers. So I'll get right into the key part of your trading strategy, which is buy point. Buy point, of course, some of us do already know what that is, but I'm just going to explain that to us. Buy point is when a trader decides that, okay, from this point, I'm going to take my buy. So meaning that you've looked at the chart, you've done your analysis, and you've agreed that, okay, when it gets to this point, I will buy from this point. When it gets to this point, I will sell from this point. And if I'm doing the buying and selling at this point, where is going to be my stop loss? Where is going to be my take profits? All of that consists of your strategy. While you're doing your analysis on the chart, you have your buy points, you have your sell points, you have your sell, your stop loss, you have your take profits. All of that consists of your strategy. Now, I'll go right into time frame. Now, time frame helps a lot. There are different people that trade different time frame. I know somebody who trades the M1, that is 1 minute time frame. I know somebody who trades 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, 1 day. You know, there are different time frame, and people use this different time frame for their trading journey and their trading strategy. So I said that different people use different time frame for their trading strategies. Some people use 1 minute, some people use 5 minutes. You know, it can go as far as 1 day, 1 week. For me, what I do is before I get right into my day, I mean, before I know I can execute a trade, I go as far as 1 week from the weekly time frame into the daily time frame, then from daily into H4, that's 4 hours, then from H4 into 2 hours, from 2 hours into 1 hour, then from 1 hour to 30 minutes, from 30 minutes to 15, from 15 to 5, from 5 to 1. You know, it's that large for me because I need to first see what the market is going to do and the direction the market is going. Sorry, first off, where the market is going, where it has been and where it is going to before I can say, oh, okay, it's going to buy, it's going to sell. But for people who do M1 and M5, they look at it, they are not seeing a bigger picture. They are seeing what is happening, what is going to happen in the next 5 minutes, or what has happened 5 minutes earlier. The same thing with 1 minute. What has happened 1 minute ago, what is about to happen in the next 1 minute. You know, so it's always better that you look at your analysis from a higher time frame before you get into your lower time frame and execute. So what I do is from my higher time frame, I do my analysis, and then I come into my lower time frame to do my execution, following my trading plan, also known as trading strategy, in order for me to manage my risk very well. That is how I go. Yes, you have your tools and analysis. We have the technical analysis. We have the fundamental analysis. So technical analysis basically is looking at charts and past prices to predict future movements. Think of it as studying past weather patterns to guess tomorrow's weather. So that's basically what technical analysis is. You're looking at what has happened before, just like I mentioned. You're going into the higher time frame to look at what has happened before to predict or to analyze what is going to happen in the next 30 minutes, looking at it from your higher time frame. That is from your H4, from your 1 day, from your 1 week, from your 1 month. I go as far as 1 month sometimes when it is required, you know. So that's basically what technical analysis is. Then for fundamental analysis is more like the overall health of the assets. Like I'm looking for the best word to use for fundamental analysis. Fundamental analysis, basically, just like the name has said, the fundamentals, the foundation of that particular asset you want to trade, or that particular pair you want to trade. You are looking at different things in the fundamentals. You're looking at how the news is going to affect it, and how that would work with your analysis. Then, of course, we are very much aware of how to manage risk. We know what is called risk management, and we try to manage the risk as much as we can. So managing your risk is part of your trading strategy, because if you don't have risk management in your trading strategy, you are not a trader, because that is you just, dashing the market your money. And I always like to say over 20 trillion or more self is invested in the markets every day. So the market can never run dry. The market can never go broke. You are the one that is going to, well, I'm not going to say that. I mean, you are the one that is going, let me be positive. You're the one that is going to make your own money. Go in there, take your money and come out. Don't be the type that, this thing chopped me, I must go back and chop my own. No, the market will still take you. It will take you big time, and it will not move one bit, because when you think about how much is being invested in the market every day, you should know that whatever you do, the market doesn't feel it. Even if you make $1 million from the market today, the market doesn't feel it, because as you are making yours, some people are crying in their backyard and say, oh, why did I do this? Why did I do this? And now, don't get me wrong, right? Your trading strategy is your plan for the day. It is your plan. So meaning that if it doesn't go as planned, don't start, don't be a revenge trader. Don't be that type that because you've done your analysis and then it should go in that direction and it doesn't go in that direction, you're waiting for it and you're like, why is this thing not happening? And because of that, your trading psychology has left you. Your composure, in fact, everything that has to do with your trading psychology has left. So right now, what you want to do is revenge trade because you want to make that money back. That's on you. That's you. And for a guy, that's you and your girlfriend. For a lady, that's you and your boyfriend, which is greed. Now, this boyfriend is called greed. This is you and your partner discussing how you want to lose your money because trading psychology has left you, and now you're upset that you've lost so much, and because you want to recover back, you now lose more. So always have that in check, your trading psychology, your emotions and everything in check. In check. What I mean in check is when you do your analysis for that day and you take that trade and it doesn't go as planned, risk management comes in. You know how much you are risking in that particular trade, and you know your daily plan for that day. You know your daily target, you know your daily stop loss, your loss for that day. Yes, everybody should have a daily loss, weekly loss, and a monthly loss. Daily profit, weekly profit, monthly profit. So following that plan would help you become a successful trader. So what you do is when you've hit your daily loss for that day, my brother, my sister, close. Go back home and rest. No, sorry, you're already in your house, right? Keep your phone and rest. Yes, you can look at the chart, but I would not advise you to look at the chart because you always have that your calm partner that tells you, don't you think you should enter again? So close the chart, distract yourself from taking that trade, from entering again and losing more, because that is where that's you not being able to control yourself. It's the same thing with you making profits in the market. It goes both ways. You make profits, close for that day. You meet your target, close for that day. Your target profits, close for that day. You meet your target loss, close for that day. It works both ways. You can be overexcited and say, oh yeah, I've made so much money, and the market is looking like it's still going in that direction, and then you enter, oh yeah, it starts running loss. What will you do? You are now upset that profit you've made that day, I should have just relaxed. I should have just stayed in my place and not take that trade. That's how it works. It's all in your trading psychology and keeping yourself I'm trying to look for the right word, keeping yourself in check and knowing when to do what to do and how to do it well. All right. So I'm still at managing risk. That's risk management. I'm still there. So guys, always have that in check. Protect your money. Set limits, set daily targets, set weekly targets, set monthly targets. Always have that target. Target for take profit, target for stop loss for your particular trade, and target for the day, profit and loss. I have $100 account. My target for today is $5. How am I going to achieve $5? I do 2 entries and I take 1, 2 trades. I take first trade and it's profitable. How much did I make? Maybe $3 or $5. If I made $5, I should be satisfied that, oh, I have met my daily target for today. Of course, there are people that can trade $100 account and grow it to 500 in one day. All the best. You've met your target. Okay, so what stops you from not trading the whole week? If you've made $500 on top your $100, must you trade every day? Ask yourself that question. It happens once in a blue. We have people like that trade their $100 and it gets to $150. That's 50% profit on their $100. Why not rest for that week? Because you can still go in. There's every possibility that you can still go in that trade and you will lose the whole $50 that week. Why not rest? But of course, we are traders. We don't listen to ourselves. Even when we talk to ourselves, we would want to execute again. So it's putting yourself in check. I am a victim of that. I'm not gonna lie. I am a victim of that. 100. I am a victim. We need to learn to put ourselves in check sometimes. I mean, there are days where I tell myself, I don't think I want to trade today. And I distract myself as much as I want. And then I go to the charts and this chart looks interesting. I think I should take it. And then I take it. It gives me profit. Sometimes it gives me loss. If it gives me loss, I'm coming back to myself and I'm like, I thought I don't want to trade today. Now why I take this trade? You see, it happens to the best of us. It happens to all of us, no matter how we preach on it. But what we need to do is manage it very well. Now, that has happened. I have made loss for that day. And of course, I have my daily loss target and I have all of that. So when I hit that, I know that I am not coming back in that trade. Neither am I trading the whole day again. Yes, I've made that loss for that day. I shouldn't have traded, but I did. And I've made that loss. What do? I let it slide. Tomorrow we come back. There is always tomorrow. You cannot make everything you want to make from the market in one day. The market would always want to take its own from your $20, the market wants to collect it. So why stress yourself? Even though you're on a platform where they post signals every day, take your own and leave. No matter how good the signals are, no matter how good the signal is, no matter how good the analysis looks, tell yourself, I'm following my own trading plan. Monday I trade, Tuesday I trade, Wednesday I trade, Thursday, Friday I don't trade. I will rest. No matter what everybody is saying on the group, yes, I made 100 pips, this one pips. Of course, that voice would always come back to you and tell you, you should have traded. But no, tell yourself, I'm following my trading plan. As long as you can follow that trading plan, I tell you 100%, you are going to be a successful trader. All right, so that's that on managing risk. So I will go right into scalping. Scalping is one beautiful strategy that most people use to flip and unflip. Oh yeah, I will use the word flip. To flip their account either in profit, in loss. Because yes, you are flipping it any which way. If it is profit though, it is flipping. Is it loss? So it is flipping. You tell yourself, you wake up today I'm going to scalp. I want to flip this account. In your mind, you are flipping to profits. Meanwhile, you are denying the fact that there is also loss flipping. So and then you take the trade because you don't have a daily target, even for your scalping, you might likely blow that account. Yes, you can go as far as, yes, I've been able to grow this account to, say you start the day with, say $50 and you've been able to grow that $50 to $100 with scalping. Why don't you just stop there, right? Why don't you just relax? I've been able to grow my 50 into 100. Yes, I should be happy and relaxed. But you see, because you don't have a target, a daily target, you go back inside and you scalp it to loss back. You flip it back to zero. You should be proud of yourself, but no, you're upset. No, but that's you you should be proud. That, oh yes, I was able to flip my $50 to $100 and from my $100 to $0. That's good flipping. So if you have a trading plan, if you follow your trading plan, your trading strategy, and then you do all of that, you should know when to stop. You should. I like to tell people that trading comes with a package. When you start to trade, before you start trading, you tell yourself, know me, I cannot be greedy now. Once I see profit like this, bam, I've closed. Once I see this, I've closed. But nobody really likes to tell us the truth. Traders don't really like to say it, but I like to say it. Trading, when you start to trade, it comes with a package. It comes with greed. No matter how gentle and how calm and how collected you are, trading will bring out even the you that you don't know. Forex trading will bring it, not forex trading generally will bring it out from you. That one that you think that it is not you, oh, trading will bring that in you. So you need to also be observant of the things that you are doing. Most times I call them new things. Yeah, when you discover new things that you're doing that you usually don't do, put that in check. Don't act like, oh, it's not important. Maybe it's just one of those things. No, these are signs. Your mind, your body, everything gives you signs when you start to trade. I mean, I was never greedy. I am not greedy. But you see, when I started forex trading, greed came with the package. I used to be very patient. In fact, I'm the most patient person on earth. But when I got into forex trading tested my patience. Is this trade going to go like this? Okay, it looks like it's going up. Let me enter. No, I should be able to tell myself, no, I will work with my analysis. I will work based on my strategy. I will work with my trading plan. So getting into trading, you need to realize that there is greed, there is patience, there is risk management. There are a lot of things. Even if you are like the most richest person in the earth, and then you lose, in fact, as small as $50, if you lose it, it will pain you. Why not just put yourself in check and tell yourself, all right, this $50, this is the plan for this $50. My profit target every day for my $50 should be maybe $1 or $2. Now, if I get to this $2, me and you know that you will not follow that plan. But yes, let's continue. My $50, I can make $2. If I make $2 today, tomorrow I come, and then maybe I make $1 or $1.50. It's still something. I should be able to rest for the day. And then next tomorrow I come and then I lose $2. All right, yeah. But me and you know we will not follow this plan, because from that our $50, we put it in on Monday, and by say Friday we want to get to $10,000, because of course it is forex now, and when we enter we will make so much money. No, it doesn't work like that. It can't. Forex is not a get rich quick scheme. It's not like that. You see, most people that we see their trading results and their trading whatever on social media, as much as I don't like to get involved in people's affairs, but most times these things are not real. They are not. So why put yourself under pressure because you're seeing an account with the balance of $400 and then you are seeing $10,000 profit with $400 balance? Sometimes these things are not real. Even though they show you that it is real, it may not be real. 100% it may not be real, because nobody will want to risk. Yes, forex trading is risk, but nobody will want to risk that much. Nobody would want to risk that much to be there. Nobody wants to lose money. Yes, we take risk in the forex market, but nobody wants to lose their initial deposit or their capital. Nobody wants to lose it. Everybody wants to make on top of it, and when we lose it, it hurts. Even though the profit we made on top, we lose it, it hurts. So Don't be in the opinion that if this guy can do it, I can do it. No, follow your own plan. Create your plan for yourself. Create your plan. Nobody is in the best position to create that plan for you. You are the one that would sit down and tell yourself, okay, with what I have learned so far from this forex market, this is how I want to start trading. These are the things I'm looking out for when I start trading. All right. So you put yourself in check, you put your mind in check, everything in check. I diverted from scalping. So yeah, we have day trading, we have swing trading, we have position trading, we have trend following. Day trading is one beautiful way to be a successful trader, in the sense that day traders, I feel like day traders, if you're a day trader and a swing trader, you've mastered patience to a point. So basically, day trading is buying and selling within the same day, trying to take advantage of short-term price changes, that trying to take advantage of short-term changes. So you do your analysis in the day, and then you tell yourself, all right, so when it gets to this point, I either buy or I either sell based on my analysis, based on my trading strategy, based on my trading plan. How much am I going to risk to take this trade? So you execute. It either goes to profit or it goes to loss. Now, because they are patient and they've done all the analysis and they trust the analysis, trust is another thing. And because they trust the analysis, they wait for it to execute. Now, day trading, of course, we know what day is, meaning that the whole day you have 24 hours. So meaning that you take that trade in the morning, it may even be in the afternoon. You have 24 hours. It may even be in the afternoon, or it may be as early as 7 a.m. You've done your analysis and all of that, and then you execute, and then it starts to go in loss. So they have their stop loss. If it hits the stop loss, they are fine. They go back to the analysis and do it again, check what they did wrong, check the direction of the market, and they execute. They are patient to the point that when it starts to run in profit, they are not quick to close, because they see it going as far as maybe 12 hours and all of that. So they watch it, or they find something else to do. But because they've trusted their analysis to go in the right direction, some don't have to look at it, others do look at it, and then they execute, and it goes like that till it gets to profit. You see, that's patience in check. That's your emotions also in check, because while that trade is on, you're going to have different voices talking to you. Don't you think you should close now because it's going into loss already? Don't you think you should close early? It's already running in profit. Don't you think you should close? You should close now. All of that will always come. Those are your emotions in check. Those basically your emotions in check. These are voices telling you, okay, this is what you should do. This is what you should do. You should do it like this. But because they've mastered all of that and they're in check, they ignore those voices and distract themselves with something else till it gets to where they want it to get to. Same thing goes for swing trading. Some people leave a trade as far as till the end of the week. You should know that all those ones, they've gone to the school of risk management, the school of emotions, the school of patience, the school that has to do with you not over trading, and you not doing it wrongly. Of course, yes, they make losses. Swing traders make losses. Day traders always make losses. But you see, because they understand how to put all of these emotions in check, they've learned to manage it very well. They execute their trades rightly. Swing traders will trade for several days, aiming to profit from a short or medium term price movement. So, which is what I just explained to us. Swing trading is you leaving that trade for as long as, say 2, 3, 4 days. That's you swing trading. Position trading is basically the best way I can explain position trading is, you have M1, that's 1 minute. You have 5 minutes. You have 15 minutes. You have 30 minutes. You have 1 hour. These are position tradings. Position tradings go as far as you can take a trade in January and predict that maybe by March, this thing is still going to keep going up. All right. That is also position trading. As long as you are 100% sure of your analysis. In fact, you need to be 100% sure of your analysis, but most times I like to be 80 to 85%. I like to put it like that because you are not in control of the market. What you believe is your analysis. What you trust is your analysis. And because it is your own analysis and then you have to always trust it, you execute based on what you think that the market is going to do. So position traders hold trade for as long as 1 minute, 5 minutes, 10 minutes, into weeks, into a year, based on the belief that the asset price will increase significantly over time. Another one I don't like, which is one of another trading strategy, which is common trading strategy, is trend following. Trend following can make you profit and at the same time can make you lose money. Trend following is traders looking for ongoing trade and make the trade to follow the trend. So if it is buying, you don't know how long it is going to buy. You enter the buy, and then when it starts to sell, you enter the sell. That's you losing that's losing focus in the forex market. So before I continue, I'm going to say you can drop your questions and you can make a request if you like to ask a question, because I think I'm pretty much done with what I have to say as regards trading strategies. So trend following is one I really do not like to talk about. When somebody tells me I'm a trend following trader, of course, yes, some of them make profits. Some of them make profits and some of them are not so profitable. I don't expect anybody to be a trend follower, a trend follower trader, because it's, for me, it just doesn't make any sense to be trend follower trader. All right. So my session is supposed to be for 30 minutes, and then yeah, we've done 30 minutes. I think I've been able to cover up the basic things. So I'm in this great detail. I started trading forex. What's mean is fact. So I'm going to start accepting requests if you have questions to ask, and if you have something to add, please please let me know. Alright, if there are no questions, 1 minute guys, I just want to share something from my trading strategy, which is beat the and beat the market makers. Alright, so somebody asked a question, and question is, so which strategy will you recommend as your best, as my best? This question is an amazing one. Why? Because every strategy works depending on how you use them. I'm not going to come here and badmouth anybody's strategy, because all strategy are profitable to every traders in their own unique way. Alright, so for me, I use beat the market makers. Before I started using beat the market makers, I was using fractals, and before I started using fractals, I was using moving averages and all of that. And before all of that, I was using RSI, I was using double top and double bottom, so there are different strategies. And for me, I would recommend one of the best strategies, the particular one I use, which is beat the market makers. Yes, it may look a bit complex. In fact, Forex may look a bit complex, but you see, once you get right into it, once you take your time to understand how this market works, you will be surprised to know that Forex trading is not so hard. it is not so hard. We are the ones that just make it feel like, oh, it is, because of the plenty English that we hear over the internet, on videos and all of that. Forex trading is not so hard. So I use BTMN. I would suggest that for you. But for you getting into Forex trading for the first time and you trying to understand how the market works for yourself, I would tell you to explore RSI and then moving averages for beginners. I think RSI is when it gets to 70, it falls. When it gets to 30, it buys. So, and that works with your lower time frame. It works more with your lower time frame because in the higher time frame, it can be in the middle. Your 70 might not, for H4 now, your 70 on M30 might be in the middle on your H4. So using RSI should be for lower time frame, say 30 minutes, 5 minutes, 1 minute. So that's when RSI can really work for you. The same goes for moving averages. I'm not so familiar with moving averages. That's why I moved from it. And then fractals. Fractals are like icons that appear on your chart. When the icon is up, it sells. When the icon shows below, it buys. That can work for your higher time frame to give you a direction at which the market goes. So in your higher time frame, you implement the fractals. When you put it, when you see it down, you know it's going to buy. So you go into your 30 minutes time frame and look at the analysis, whatever direction the fractals is showing you. All right. If it's showing you up, meaning that it is still going to sell. And once you see that buy indicator from in your lower time frame, which you've already seen in your higher time frame, you already know, okay, it is ready to buy, and then you implement, and then you take it, and then you go. So explore all these options you have, and find what works for you. That's what I like to say. I can teach you my strategy, and you may not understand it. I mean, I will teach you as the best and simplest way I can. But you see, if it doesn't work for you, it is not because the strategy is not working. It is you that don't understand it. So you can have series of strategy, but finding the one that works for you is key. All right. So I know somebody who knows ICT, who knows BTMM, who knows smart money concept. In fact, knows like 5 different strategy. And yes, another key thing I'd like to say is when you're trying out strategies, try them out on a particular pair or a particular asset you're comfortable with. I'm comfortable with gold. I learned all my strategy on gold. So I can say yes, but all the strategies I've used over time, they work perfectly. So look for a pair that you're comfortable with and try this strategy. I bet you the strategy works. It's just you having that patience to allow it to see it come through. All right. So look for a particular pair, maybe GBP, USD, maybe GYP. It may be XAU, whatever. It may be silver. This gold is silver. It may be XAR, whatever. Look for it. Maybe EUR, USD. Look for a particular pair and say, okay, this strategy I want to learn. I put it on this pair. If this one doesn't work, you learn another one. You bring it back to that particular pair. All right. If you think it is that particular asset, look for another asset. Trade it on that asset. I tell you, once you discover how it works, you are good to go. You're good to go. So just a brief explanation on what BTMM is. BTMM is beat the market makers method. I wrote down this, but trying to read from it. Okay, so this is what I'm gonna do. I'm going to share this on the platform where we have everybody. I will share my notes with you guys, and you guys can see for yourself what BTMM is. And if you have questions, you can always reach out back to me. So any more questions? Comments? None? Questions? All right. Thank you guys for coming in, and I really appreciate you for turning up for today's session. It was, I guess, hope you learned. I hope you learned a lot from this session, and we would see in the next upcoming one. We have a very special guest joining us in the next one, so stay tuned. More information will be shared. Thank you guys, and enjoy the rest of your day.